It's a weak start for the Indian market. The Nifty gives up over 1% as all sectors, apart from FMCG, trade with losses. Banks, the worst hit after a sell-off on financials, hits Wall Street. Metals too slump while mid-caps fall in line with the frontline indices.
Tata Motors is one of the outperformers today after its subsidiary Tata Tech files a DRHP for its IPO. Remember, Tata Motors owns nearly 75% stake in the IT services arm.
Equitas Small Finance Bank under pressure as more shares hit the market post the reverse merger with Equitas Holdings. Shares given to erstwhile Equitas Holdings shareholders become available for trading from today.
Electra Green Tech's rally continues. The Maharashtra government has proposed the purchase of electric buses in the budget. The company is also planning 800 crore rupee fundraise, and the company's management has also told CNBC-TV18 that it's the lowest bidder in the CESL tender for around 13,000 electric three-wheelers.
Hello and welcome. You're watching us here on Chartbusters. I'm Manglam Malu, with me Nigel D'Souza. Looking like a weak Friday for the Bulls. The last Friday went to the Bulls. Bears said, okay, let us party this time around. 200 points shaved off on the Nifty, 17,400. Let's see where we go from here. But let's talk about individual stocks. We do have with us a Motilal Oswal note, which suggests that logistics companies could benefit as dedicated freight corridors will help boost the modal share of railways in freight transformation. We do have with us management of Gateway District Parks. Prem Kishan Gupta, who's the chairman and managing director, joins in now. Thanks a lot, Mr. Gupta. Always a pleasure speaking with you. Just wanted to understand, what currently is the share of traffic freight between road as well as rail? And in areas where DFC has been commissioned already, what kind of change have you seen?
Well, good morning, Manglam. The changes that we have seen in the rail to road, it is growing.
Right, seems like
by quarter complete, and once the DFC is complete, all the benefits of the rail freight will definitely be good for all the rail companies, and we are well positioned to take advantage of it, and we are already in key locations, and we definitely are looking for this DFC to complete, which is where the new deadline is over the next 2 quarters. So let's hope that it gets complete and full benefits of DFC are given to the customers as well as for the company.
Okay. Hi, Mr. Gupta. Good morning. The National Rail Plan, they expect the share of freight traffic by rail to go up to around 40%. That's by 2031 from around 18% in 2020. You think it's a realistic assumption?
Yeah, I think the way the rail share has been increasing, right now it is just below 30%. So it will not be difficult to achieve that once these DFCs are completed to Gujarat ports as well as to Nhava Sheva. And simultaneously, there are works going around, from north to south and east to west. So realistically, these targets are achievable, but with one rider, that the projects should be implemented and completed by the railways on time.
All right. And what's your market share in the terminals that you operate?
Well, in the NCR region, we have about 16 to 17% market share, whereas in Punjab and Ludhiana, we have about 33% market share.
All right. And once the DFC, as per the government's stipulated timeline, is commissioned, what do you think can your market share go to?
See, once the DFC is completed, then overall volumes will increase. So we will not only retain our market share, but we also are looking at improving our network through our flagship terminal Garhi Hasru, which will serve as a hub for all the locations in the north. And definitely we will look forward to increase it closer to 20%.
Okay. All right. Mr. Gupta, the track work in NCR region, that's what affected business in Q3, right? In Q4, have things improved? Give us a sense in terms of volumes or some kind of color.
See, some improvement is there in the volumes. The track work has been done in the north near Delhi, But now we have, some track work going on, and with the passengers trains running full. Like, in the past during the COVID, now it has slowed down the turnaround of the trains. But more than that, exports have taken a hit. So imports have surged, and exports have taken a hit in the last few months. That is the reason for worry.
So what kind of volumes can we expect in the fourth quarter, and does that change your outlook for FY24? Because I remember the last time you joined us, you said that on an overall basis, FY24 volumes will be a little higher than FY23, even though there would be a decline in, or rather flattish sort of performance in the CFS volumes. Just wanted your thoughts on both CFS as well as rail volumes for the fourth quarter and next year.
See, fourth quarter has seen increase in volumes compared to Q3. So we are expecting to close the year with a net gain of volumes both in rail and CFS. In rail, the growth is about 8% year on year, and on the CFS side, it is 10% year on year. Just one thing that we have to look at the CFS volumes is that this is without Punjab Conveyor, which we exited last year in January. So first 10 months of previous year are, if you compare that with the current first 10 months, CFS volumes have gone up and the profitability has also gone up.
Right, and the fourth quarter, you also have the Kashipur terminal coming in, right? The full performance of that business. So how much could that aid your revenue and volumes by?
Well, I mean, Kashipur terminal, we have operations now since January, so we have the full quarter. So that will add about 7,000 to 8,000 TEUs in this quarter. But going forward, we are looking at 10 to 12,000 TEUs per quarter.
All right. Thanks a lot, Mr. Prem Kushan Gupta, for joining in and giving us all those details on the business going forward. Wish you good luck for the fourth quarter and next year as well. And hoping that all the DFC terminals are commissioned on time as you are expecting, because once that happens, the share of rail will increase as per the National Rail Plan from 18 to 20% to about 40-odd%, and that would benefit players like Gateway Distriparks as well as Container Corp. Take a short break, come back. Actually, before we do that, let's also get you some ideas of profit coming in from our colleagues at Money Control Pro. Nitin Sharma joins in.
KPIT's 3Q revenue jumped 23% sequentially, which included the Technic acquisition impact that contributed $40 million to our top line with a 20% EBIT margin. Organically, KPIT revenue grew by 4.9% quarter on quarter. Top line growth was led by the architecture and middleware consulting division that grew by 50% sequentially. EBIT margin, on the other hand, was flat at 18.5%. Company won a TCV of $272 million that included a single $100 million mega engagement with Renault for the next generation software-defined vehicle program. KPIT expect to announce another $100 million deal in the next couple of months. On the guidance side, KPIT management expects to beat its FY23 revenue growth guidance of 31 to 32% in constant currency terms and 23% in the organic terms. EBIT margin guidance is unchanged at 18.5 to 19%. Company has been on strong footing with the revenue and deal pipeline visibility and well placed to drive growth from the ongoing transformation in automotive industry. KPIT's share price recently touched a new 52 weeks high. At the current market price, the stock is trading at FY24 PE of 44 times. Investor can add this stock slowly, taking advantage of the correction.
Thanks a lot for that, Nitin. For the time being, we'll slip into a short break. But on the other side, we'll focus on the metal space. Mr. PK Jain, Director and Group CFO of Tata Energy and Minerals, will be joining in to tell us about the recently won coal block that they'll be operating, as well as how business is shaping up. Welcome back. You're tuned in Chartbusters here on CNBC-TV18. At least for the time being, there's some bit of stability that's coming into the markets after an hour of trading action. So we have bounced off close to around 57 points from the low point of the day. 17,350 becomes the first hour low. Let's see whether or not we can defend that and fight back. Remember, the 200 EMA is at around 17,430, and the bulls would like to get above that level. For the time being, let's invite our second corporate on the show, Tata Energy. Remember, they successfully bid for mining operations at the Kalyani underground mine. What does this mean? What is the revenue potential? And when do they start operations? Mr. P.K. Jain, Director and Group CFO of the company, joins us on the show. Hi, Mr. Jain. Congratulations, first of all, on winning this particular mine, getting the right to operate it. Could you tell us, I'm aware that you'll be sharing close to 4.5% with SECL. But what is the potential revenues that you could see or potential mining quantity that you can come out with from this particular mine, and by when?
Yeah, very good morning, Nigel. Thanks for the congratulations. This mine we have won as a developer, and it will take about 2 to 3 years to commission the mine and start production. In third year, we expect to start some production. And at the initial estimates, based on the initial estimates, we'll be extracting about 2 lakh tons of high-grade gold from this mine every year. And the third year, it should start the production. And it should give revenue in the range of about 180 crores to 200 crores.
Okay.
In the range of
So, the line is not very clear, Mr. Jain, but 2 lakh tons is what you're talking about, and revenue potential of 180 crores plus. So, you're factoring in the coal price that you'll be selling it at will be close to 9,000 rupees plus. Are we getting that correct?
Yeah. It will be 9,000.
And you'll have to share 4.5% with SECL as per the winning tender. But how much margin can you make besides that on this particular 180 crores? What kind of EBITDA number can you look at?
Should give a reasonably good margin. It's very difficult to give initial estimates at this stage. Let the process complete and let us acquire all the required land and etc. So it will be very difficult, but it will be giving reasonably very good margin.
All right, reasonably good margins. You will not be able to quantify that. Mr. Jain, in the past, your ferroalloy business has dragged the profitability, and this is due to one part shutdown. Secondly, due to high cost coal inventory that you were sitting on. Just wanted to know if that is extinguished, and will you return to profitability in this quarter, or if not, then by when?
No, in this quarter, definitely it will be better than the previous quarter. But it will be giving the EBITDA positive, but not material margins, because there is not much of the improvement in the prices so far as the ferroalloy is concerned.
Oh.
Yes, because of the inventory losses, but we were having, there won't be any inventory losses on that count. We will be in the profit in the ferroalloy segment also.
So at least it turns back into the black from the last quarter. Great news. Okay, let's talk about the pellet prices, and that's something that the street always wants to hear from players like you and Godavari Power as well. Now, for the past quarter, the average realization you got was 8,150. But a lot has changed now. You have the option of exports, on the ground traction as well as there. So what is the current average price of pellets? Point number one. And for 9 months, you've sold close to around 390,000 tons. What do you end the year with in terms of pellet sales? And for FY24 as well, what can pellet sales look like?
Yeah. So far as pellet prices are concerned, present pellet prices are in the range of 10,000, 9,800 to 10,000 is the present price. But the average should be somewhere in the 9,500 range for the quarter.
Okay.
So far as
And volumes? What kind of volumes can you do?
we should be able to produce complete 100% of the capacity of 8 lakh tons in the quarter, in the year.
Now, how much will you sell, sir? How much will you sell? Because you'll consume some of that in-house as well. For this year, how much will you sell?
This year, our sales should be somewhere in the range of 5 lakh tons.
5 lakh tons from what, 394 that you've done in the first 9 months, right?
5 lakh tons plus.
Okay. And what will the blended EBITDA margins for your company look like? Just trying to understand what the EBITDA in this year could be. It was what, 850 crores in the first 9 months.
It will be very difficult, and it will not be fair on our part to give any figures before the results are published. But yes, broadly it should remain in line and might be slightly better than the previous quarter.
Okay. The EBITDA big contribution is going to come from the hydropower project, right? And that's got commissioned, and that's gradually ramping up. So what is the EBITDA contribution you'll get from this project?
Which particular project you are talking about?
The 113 megawatt project that got commissioned. So that will give you some additional EBITDA, plus you already had exposure out there. So the total contribution from the hydro vertical will be how much? EBITDA.
Yeah, EBITDA from the hydropower project. This project was commissioned in the June 2021.
Okay.
So last year it had an impact on last year's profit also included the EBITDA of the hydropower projects.
Okay.
And during the 9 months, we had EBITDA of about, from hydropower projects, all the hydropower projects, we had EBITDA of about 218 crores in 9 months.
Okay.
It will slightly go up from here because this is the lean season. Last quarter is lean season. So it will not materially increase. Yes, it will increase from here, but not materially.
So 218 crores is from the entire hydro vertical. The EBITDA is 218, right?
218 in the 9 months.
So in the 9 months. And you say, so on a steady state basis, for next year as well, it will contribute close to around 240, 250. Is that a fair number?
Yeah.
Okay, all right. So just plugging in the numbers then, you have additional capacity that, your pellet sales will be good. You also looking at integration because of some coal projects, you're getting some captive coal, plus your iron ore as well, there'll be some captive iron ore coming in there. Putting all this together, give us a rough understanding, sir. What can the EBITDA number look like?
EBITDA number for 9 months we have already published. That is about 870 crores, in the range of 870 crores, including other income. Operating EBITDA, if you see, that should be somewhere about 850 crores in the 9 months. So it should improve from here with the additional increase in the capacity and improvement in the capacity utilization of the pellet plant, and maybe the coal mines will also, we will ramp up the coal mine capacity of the existing running coal mine.
That's what we're trying to get, sir. You said it will improve because of these factors. How much do you think it can improve by? If you could give us a rough percentage, rough range. I understand you won't be able to give us exact numbers, but some sort of direction?
As you know, we are in the commodity business and which is subject to heavy price fluctuation. So it's very difficult to give any direction on that. But one thing is certain, yes, there have been new projects which have commissioned hydropower project. We have consistent EBITDA.
Yeah,
there won't be any material deviation. So far as hydropower business is concerned, there won't be material deviation on the EBITDA side.
Okay.
But yes, as far as the steel and the ferroalloy business, it is subject to cyclicality. So it's very difficult. But yes, new projects are adding in our business that will add to the EBITDA.
Correct.
And we feel it should improve from here.
Okay, so 850 crores is what you've done for 9 months. If I try to extrapolate that number, you'll be ending this year itself with a number of close to around 1,150 crores approximately. And you believe that some part of the business as well will be protected. So I think it'll be fair to assume a EBITDA number of around 1,100 to 1,200 crores for the coming year, right? For FY24.
So, but we have stated when you compare with the third quarter, it should be better considering the price improvement in the steel segment.
Yes.
It should have a
So 1,150 or 1,200 crores for FY24 is gettable.
Now, based on that can be worked. No.
Okay, all right. We tried our best, Mr. Jain. Thanks so much for stopping by and giving us a sense in terms of the business outlook and focusing on a couple of verticals as well. We'll slip into a short break, but here's a quick programming note. On the 14th of March, CNBC-TV18 will host what will be India's largest summit on gender parity in Delhi. Women leaders from all walks of life will come together to brainstorm and help take decisive steps to bridge the gender inequality that exists in India and across the globe. The event starts at 4:30 p.m. on the 14th of March, and you can catch all the live action right here on CNBC-TV18.
Welcome back. Even as the frontline indices are down by about 1%, a couple of green shoots that should emerge from the first hour of this trading session. One, we've recovered from the lows. Secondly, Adani Group stocks, they're recovering. So we have Adani Ports, which has recovered a good 2.5% from the lows. Adani Ports is at the high point of trade. Another formidable index heavyweight, ITC, after a couple of days of correction, has now moved to the high point of trade. So that's another stock that we should be keeping an eye out on. The HDFC twins have recovered from the lows, as has ICICI Bank. So all these factors point towards at least a near-term support for the Nifty at today's low. That is something we'll be keeping an eye out on. Take a short break, come back, we'll have Trading Hour coming up for you. From Nigel, me, thank you for watching.